Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to be talking about gold's continued breakout here, where we see gold equities moving, and also a comment on the US dollar, which has now just broken below that 103 level on the dollar index. We are chatting with Craig Hemke, founder and editor of TFMetalsReport.com. Craig, as I said, let's talk about gold's breakout, something a lot of the gold investors and a lot of our listeners were waiting for, a breakout above 2100 and continued follow through day after day. If today is an up day for gold, it'll be the sixth day in a row, but the move really got going on Friday and has continued so far throughout this week. Craig, what are you seeing in the gold chart and in general interest for this breakout in gold?
Yeah, it's fun to finally see it happen. Anyway, nice to visit with you again, guys. We always talk about my annual forecast when I write it in January. And I always write it mainly for myself, just so I have a record of what I was thinking, so that invariably all the stuff I get wrong, I can go back and, think about, okay, why was I thinking that? Last January, 2023, I thought we'd break out. I thought, the shift in Fed policy would be coming, and I was in the pending recession camp by late in the year and all that stuff. And so I thought, okay, once you break out clearly above 2100, it'll be undeniable. I mean, you trade in a trading range like that for 3 years, everybody could see, you go up to 2000 or 2050 and fall back. And so, the chart just would be what it would be and everybody would see it. Okay, here's a breakout. And I thought, well, okay, anytime my experience, over the decades has been, it doesn't matter what it is, if it's a stock, commodity, anything, trades at a new all-time high, breaks out, it gets some love and attention, and it gets headlines, and people go, oh, look at that, it's a breakout. And on average, not, you can't just say it's all the time, but on average, you get about a 10%. It's good enough for a 10% rally. And so when I wrote the macrocast last year, I said, okay, we get through 2100, we're going to go to 23, and then, pull back and consolidate and all that kind of stuff. Well, it didn't happen because obviously the recession didn't happen. The Fed policy shift didn't happen. Everything got pushed back to this year. So this year I said, okay, well, this definitely think it's coming this year. And again, once we get above 2100, you get some press, some pubs, some love. People see the charts, the hedge funds see the charts, all the, and you get this rally. And that's now what we're in the midst of. All that time above 2000, 4 months in a row, consolidating above 2000, and then finally here you get this breakout. Everybody jumps on board. We were barely a week ago at 5-year lows in COMEX gold open interest, total number of contracts, like 410,000. I mean, you could say nobody cares at that point. And you're not going, and gold was basically trading sideways. Well, as we've gotten this breakout, through yesterday, we're up to 490,000. So we've added 20% to the contract, 80,000 new contracts. And what's that? That's hedge fund money, institutional money coming back in, wanting to get on board, seeing the breakout. And that's what you need. If you're going to get a rally, in an actual rally that has legs, you got to have institutional money. You got to have hedge funds and the like that want to come in and buy the derivative, and get their gold exposure because they think the thing's going higher. And so all these things are finally coming together. I don't think we go straight. We're not going to 2,300 by next week. We've already come up $115 in the last, 5 or 6 days. But I still think that's the target, and then we'll kind of see where we go from there.
Well, Craig, it sure is refreshing to actually talk about gold breaking out in reality instead of it being theoretical. So it's nice to see that it's finally playing out. To your point about the more interest, the more open interest from the hedge funds and more funds getting positioned on the long side, I guess the question is, do you think this is happening because of just financial reasons? Is it still some geopolitical reasons, or is it technical reasons? And the reason I ask, is it technical, is because we just saw gold at the end of last year do the highest monthly, quarterly, and annual close. We had a really good close to end the month last month, and there was so much momentum building up where it kept bumping its head against the upper side of this resistance that it was overdue to break out. So is it just a technical breakout, or do you see news that's driving the interest in gold here?
Well, the news drives it first. The news drives the breakout, and then everybody jumps on board and wants to ride the wave. The news last week, we turned around. I think it was Thursday of last week was the PCE. I think, if I remember right. which is allegedly the Fed's favorite inflation indicator. And it was mild, and gold rallied. And the next day, which was then the 1st of March, first day of the month, all that kind of stuff. And gold rallies again, but it kind of fell back. It was about 2060 maybe. And then the thing that was a catalyst that day is one of the Fed goons, Goon Waller, was given a presentation, and he had a whole thing laid out. Obviously I haven't seen it, but the reporting of it was, like a PowerPoint presentation. And he said, here's the way I'd like to see our monetary policy evolve going forward. Now, again, he's just him. It's not like, he's got this omnipotent, all-knowing, he's in control. But he said this is what he'd like to see. And it was kind of a twofold thing. He said, I want to see us, remember the old Operation Twist back 10 years ago where the Fed was selling the long end and buying the short end, and all that kind of stuff. He said, I want to see us do something similar where we move most of our balance sheet into the short end of the curve. That's the first thing he said. Then he second said, that then will open it up, kind of in a barbell kind of thing, will give us more space to add asset purchases to the long end of the curve when needed. And and then gold shot up $30 the rest of the day on a Friday when you would think, not much going on. That was the sign that, the stuff that we've talked about, guys. When push comes to shove, the Fed can talk all tough and pretend like they're on the side of the little guy. We don't want inflation, we got to get inflation under control and stuff. But there starts being bank failures and, market crashes and whatever. To heck with the little guy. The Fed's going to side with the banks, and we're going to be talking emergency rate cuts and more QE and all that stuff. So the people that kind of had their head in the sand thinking that no, the Fed, they're never going to do QE again, and Waller kind of alerted them that that's not the case. That shot gold higher, finished at all-time highs last Friday, daily and weekly, and and this piling on has come ever since. So that's kind of the order of events.
Let's talk about the gold equities then here, Craig, because look, we have been talking about just how much they were underperforming as gold kept touching its head up to those all-time highs. The equities kept drifting lower. And the equities now, though, have shown a little bit of life. It's a very different chart than the gold chart, but even something like GDX is up over 12% in just the last 5 trading days. So there is some momentum to the upside, but again, a very different looking chart and still a lot of work to do on the upside. I've even noticed some of the smallest stocks getting a bit of a bounce, but again, off some pretty depressed prices. What are you seeing in terms of gold equities and this potential here? If gold is really going to run, the potential of these stocks to truly outperform to the upside.
Yeah, you wonder how fast they can catch up because they're so out of favor. And at this point, they're basically value stocks. I mean, I remember we talked last week about my disdain for Newmont and Barrick and how, they have 20 years. They're lower in price today than they were 20 years ago, and gold's 5 times higher. I'm like, well, that's just not a stock I want to own for the long term. If you want to own in the short term, and you think, it's going to go from 32 to 36, hey, knock yourself out. But that's not my strategy. And so I don't like those big ones. And we've seen, as you said, there are some kind of mid-tier producers that are doing pretty well. And what you can generally expect gives it more like a guideline than a rule. But as share runs begin, and you get into one of these periods of 6 or 9 months where the shares do pretty well, it almost always starts with the big names, because people see the price of gold. I mean, think Stanley Druckenmiller. Remember Stanley Druckenmiller, the headline 2 weeks ago about how Druckenmiller was buying Newmont, right? Not that he's not a smart guy, but that's what people do. They go, well, maybe I should buy a gold miner. And they don't know a good one from a bad one, or grade, or, or all in sustaining cost. Yeah, well, Newmont's the biggest one. We'll just buy that one. And that's kind of how it starts. Then as it continues, that's when you start getting a bit into the, the mid-tier and the juniors, and then eventually into the explorers. And, if we're on that kind of move again, where we go from, 2,300 and then consolidate, and then God knows where we go from here this year, politically and geopolitically and monetarily. But if the next move is in 25 or 27, then you get enough of a sustained spotlight on the metals that then miners start to diversify in their growth like that. So It's nice to see the GDX if you want to use that as a proxy moving up. But boy, it has a long ways to go. We all know that. And if anything, if anyone's going to cheer on anything, I just keep cheering on the metals, because if you can get gold to keep going higher, it'll drag silver along, and it'll drag the mining shares eventually too. So just kind of keep cheering on gold, and hopefully everything will catch up.
Well, speaking of the catch-up trade and cheering on silver, let's look at silver, Craig, because it's had kind of a nice bounce too. It's been overshadowed by the fact that it's not making new all-time highs like gold is, but it was down around 22, some change, and now it's up in the mid 24s, about 24.58 at the time of this recording. It's had a nice bounce, and that usually correlates to the action in the mining stocks. How are you looking at silver?
Well, contrast this with gold. Silver so far has been really nothing but a short squeeze. In fact, while silver's been rallying, whatever it is now, $1.50 in the last 6 trading days, open interest in COMEX silver has fallen by about 5,000 contracts. Now, you know how I feel about the CFTC and how they survey the COT report every Tuesday and then sit on it for 74 hours. The COT report we got last Friday revealed a very attractive setup for another short squeeze in COMEX silver. If they'd have told us that on last Wednesday, 8 days ago, we all could have maybe profited from this information. We didn't get it until after the close on Friday, and then, everything's already cooking. And all we've seen so far in silver, like I said, is a short squeeze, as evidenced by the open interest declining. So open interest going down because shorts are being closed out. Now, there's been a lot more shorts closing out that you don't see in that open interest, because there's certainly some longs coming in on the other side, which is bumping open interest back up. So the net change, about 5,000 contracts. Again, contrast that with gold, where sure, there's been a little bit of short squeezing, but mainly it's been a rush of institutions to get long COMEX gold. We have not seen that yet in silver. That day is going to come. But again, where gold's in this range, it had been for 3.5 years, and now it's clearly broken out. Silver's nowhere near that. When that day comes, and it will, then you'll get this big rush into silver again, and silver will do what it does, going from the 30s and then up into the 40s. But none of that's going to happen until it gets above 28, and it ain't going above 28 until it gets above 26. So silver still has a lot of work to do. And if you think you've missed the explosion in silver, you haven't. It just hasn't happened yet. It will, but that one is still pending.
Very interesting comments and the nuances within those COT reports. Thanks for bringing that up there, Craig. And to your point, same thing, silver and the stocks, right? It is maybe starting to get going here, but there could be a lot of upside if gold continues to run. You mentioned how we need to watch and cheerlead for gold. Let's also look at the US dollar, which today is also breaking below that 103 level, which it had held above throughout the month of February. Now, this isn't a breakdown level by any means, but it is showing a bit of a trend change, which does help out commodities broadly. What are you going to be watching for the dollar here?
Yeah, tomorrow's going to be a big day, because tomorrow is the next jobs report. And, where it's interesting that so many people are catching on at the politicization of that jobs report. I mean, what was last month? 330,000 jobs, and everybody looks at the establishment survey and the household survey and go, this doesn't make sense, and all that stuff. Last month will probably be revised lower, and we'll see what tomorrow's number is. And that might provide a little bit of a bid for the dollar, could also push it even lower. And your point is correct, Corey. If you look at the daily chart, we've had these sustained downtrends and then sustained uptrends in the dollar for about the last year. The most recent one coming out of the lows in late December around 101, then we went all the way up to 105 something a couple of weeks ago. I think the high was after the CPI report, whatever that was, 3-4 weeks ago. And now we're coming back down. And you can see that trend change, not just in an upward rally with all these bull flag consolidations. No, it's now rolled over and has taken out 103.5 and now even 103. And so the importance of the dollar in the daily trade, okay? Because again, you can look back, gold was $400 and the dollar index was 100 20 years ago. Gold's 2,100 and the dollar index is 100, right? So you can't just say, that they move opposite each other. Think of it as either an uptrend or a downtrend, the dollar being either a headwind or a tailwind to the computers as they trade commodities in general, but more specifically the precious metals. So watch the dollar tomorrow and continue to watch it is what I'd encourage everybody to do. Because if we're now into another, at least short-term downtrend in the dollar, then that also is going to continue to feed upon and create a bid and put money into the precious metals, and that rising tide will keep lifting all the boats, brother.
Well, Craig, when you look at the dollar, a lot of it does come down to the health of the U.S. economy, and so I'm sure people will be parsing that jobs report. But isn't a lot of it also how it interacts with other global currencies? Mostly the euro, the yen, the pound are the biggest movers of it. So isn't some of it also how the world is reacting to the global stage?
Oh, yeah, absolutely. Today, the yen is about 12 or 13% weighted in the dollar index, and the yen is stronger today on thoughts that maybe the Japanese were going to hike interest rates. And so, yeah, those internal components of dollar yen, dollar pound, dollar euro, that's what makes up that index. So you're absolutely right. The non-thinking computers, though, that are just simply programmed to take their trading cues, versus technical patterns, versus absolute levels and indices and that sort of thing. They're the ones that are just going to see, during COMEX hours, a dollar falling. Okay, dollar falling. The computer then takes action and buys some COMEX gold or COMEX silver. And so we've got to be mindful of that trend. Again, it doesn't mean, all hell breaks loose if the dollar's rising, and it doesn't mean we're going to the moon if the dollar's falling. But when the trend is your friend in that regard, I mean, think of how we were trading from early November into late December, okay? Look at how gold was kind of going sideways and down in January and into early February while the dollar was rallying, okay? So if we can get the dollar now to sustain downtrend again, that's going to be beneficial for us.
Yeah, good point there, Craig. And look, right now we can celebrate gold's breakout and also watch these stocks. Are they going to continue this uptrend, and just how much room are they going to make up to the upside? Because those could be the big winners for a lot of investors. But hey, right now it's a good environment for gold investors, for a lot of investors out there. So hopefully everybody is, in a way, taking part in this rally after waiting really so long for it in the gold sector. Craig, thank you so much for your time. We'll chat again next week.
Thanks, guys.